Salesforce stock has done well over the last 5 years. We can see it's gone up 111% and pays 0.5% dividend. The S&P 500 over that time frame has only gone up about 90% and pays 1.25% dividend. So Salesforce has outperformed it. If you're very generous, let's just say matched. But then if we look at the 10-year chart, right, since 2014, late 2014, if this works, it's not right. There we go. Late 2014, 472%. So it's dramatically outperformed the S&P 500 over the last decade, almost doubled, right, depending on exactly when you look. Even if you look at the all-time chart, I mean, you can see 8,000% since 8,500% since IPO in, what was that, 2004, middle of 2004. So Salesforce clearly has been a company that has been ultra successful, right? The only thing that concerns me mildly is the PE. We can see the PE is 60, forward PE is 33. So if you expect them to hit that forward PE, it is overvalued. I mean, it's okay, not overvalued. It has a steeper valuation, right? It has a high PE, and it's not super surprising that it has that, right? Because when you look at stocks that have the successful run that they have, outperforming the S&P 500, doubling it, it shouldn't be that surprising that it's over the last decade, right? It shouldn't be that surprising that the PE is double the S&P 500. People aren't going to want to sell a stock like this at cheap valuations because it's done so well, right? There's just not the supply being put on the market for it there. So it shouldn't be that surprising. However, that does put you out to some risks if you were to buy at these levels, right? If it were to have a couple bad quarters, you can see it fall dramatically, maybe an overreaction to it as well. During a recession, this stock's probably going to get hit a bit harder than the average, certainly more so than stocks that have PE valuations under the S&P 500, right? But in the long term, I wouldn't be super concerned about buying at this level because this is a company that has shown again and again and again that it can be successful, that it can drive growth, that it can drive success, right? Just get success out of the company that is. So they do software stuff, right? And we're not going to dive into exactly what they do. You can read all this if you want. But they do software stuff, all sorts of business stuff, right? And it's a good industry. I like that sort of thing. It's tech. It's not super niche or anything like that. I mean, you can see from their market cap, $326 billion. They're one of the largest companies in the world, right? If you're over 100 billion, you're a huge company. If you're over 300 billion, you're one of few in the entire world, right? So obviously they have derived a successful business. They're large. They know what they're doing. The leadership, they know what they're doing. So buying at these levels, would it be ideal? No, but sometimes you're going to have to overpay for businesses like this. And if that's too expensive for you, you may have to just wait till it dips. Maybe it has some bad quarters, but you're buying because it's having bad quarters, right? That's just how this sort of thing works. We can look at the earnings, and it's only going to be the last couple of years, but you could look at it probably at any time frame, and you're going to see this, right? Growth in revenue, growth in earnings. The earnings is dramatic, right? 10%. 56%, then another 23%. That is phenomenal. The revenue is good too, not quite as dramatic. 20%, 11%, 8.6%. I think at these PE valuations, I would want more revenue growth, but if they're getting the EPS, the profit out of it, I'm not super concerned, right? We can see, of course, with the lower earnings, lower forward PE, all the quarters are projected higher for next year. That is a good thing, right? So nothing weird there. And a lot of the ratings are good too. Schwab thinks it's going to perform slightly above average, which isn't bad as the average company. Does well in any given year usually. This is their 1 year outlook. So 3 stars wide, yeah. Companies this large are almost going to always have a wide moat unless it's one of a rare few. I'm even trying to think of any, but yeah, when you're this size, you just have such a competitive advantage, not only with the customers you already have, the revenue you already have, but also the money you already have, right? 5 stars by long. Good ESG score. They're starting to pay a dividend now. They just started, it appears. We can take a look at what some analysts have to say. Also beating on earnings too. I love that. 41. Yeah, 41 of 45 analysts say buy. Looks like 4 say hold. One dude saying underperform. He's been saying so for the last 3 months, so at least. But anyways, that's all I really got for this video. I think in the long term, you're going to be doing fine on Salesforce. It does have a steep PE valuation, but we see that a lot in these tech companies that are successful, right? Because no one wants to sell them. So in the long-term time frame, I wouldn't be too worried. If you're someone who really panic sells when things start falling, maybe I would stay away from this one for that reason. But I don't expect it to. But in the worst case scenario, you don't want to lose a lot of money just because you were rational. I mean, we can see that. Highs in 2021 and then it fell in 2022. 2023, right? It was hitting those lows. A lot of companies were. It's not unique to this one. So, but anyways, that's all I got for today, guys. If you enjoyed this video, I'd appreciate if you left a like. Subscribe if you enjoy the content. I do daily stock content on this channel. But anyways, that's all I got for you guys. See ya later.